Good morning, YouTube. Good morning. Thank you for coming to hang out with us. Let me get things up and running here. Almost there. Just need to get MT4 up. Bear with me for a moment. Hope your day is off to a great start. All right, I'm just catching up a little bit on the news as well. We're going to discuss everything. We're going to go over the charts. We're going to talk about where gold has been and where it's going. Looks like we had a big drop here at about 6:30 a.m. the way up from 33.40-ish down to 33.25-ish. And now we've come back up a little bit, hitting the monthly pivot point at 33.32. But we'll get into all that. We'll get into all that. I'll just going to get MT4 up and running here, and then we'll get the cameras rolling. All right, I don't want to jinx things, but it seems like this might be the first morning in several that we don't have some sort of bandwidth issue. All right, let's get our screens ready. Oops, don't want to do that. Let's see, I want to do one other thing. No, say it isn't so. I just messed up my MT4. I got to do it again. All right, one more moment here, folks. Okay, lights, camera, action. Good morning. Okay, here we are, ready to go. Let me see. Need to pull up my iPad over here that has my 5-second chart on it. There we are. Okay, set that back down there. And let's pull up our Zoom. So our friends in the Zoom room and Tono, trading partner and mentor, can join us. Get that screen shared. All right. And I think that makes us ready to go. All right. Let's see what we have here. Let me make sure all of our charts are doing what they're supposed to do. All right, let's start with the VIX. The VIX, the volatility index. The VIX says that we are at 1606. That is within the range of kind of normal market conditions. We're not expecting, the market doesn't have a lot of jitters today. It's been lower, but it could be much higher. That, tends to follow news events, things that create instability and uncertainty in the world. Right now, we are at kind of a normal level. The world has absorbed everything that's going on with Ukraine and Russia right now, absorbed everything that's going on in Gaza and Israel, absorbed everything that's going on elsewhere in the world, and the market is not feeling too jittery right now, so that's good. If we look at the dollar, the DXY, this is the dollar measured against a basket of other currencies, about 7 other currencies. Primarily the euro is the one that has the most weight in that basket of other currencies. We see that the dollar fell during the London session and has rebounded a little bit now. Has come back up out of the doldrums here at where was it? 98.173, and we're at 98.309 now. It's a weak dollar compared to where the dollar has been in the past few years, 100, 106, 107 even, but we're at 98 now. The dollar has risen over the last 30 minutes or so that we see down here. So on top we have the this chart up here is the 30-minute chart on the DXY, and down here it is the 1-minute chart on the DXY. Over here we have the 10-year yield. We see the 10-year yield rose gently over the London session and has flatlined for the last hour and a half, almost 2 hours. So that's what we're seeing here on the 1-minute chart of that same asset, the U.S. government bond 10-year yield. Okay, we see these two tend to move in tandem. The government bond and the dollar tend to move in tandem, and they tend to move inversely to gold. So when the dollar is rising, gold is falling, and vice versa. Not always, there are exceptions. You just have to understand the kind of market context and what's going on in the market. After you've been doing this for a while, it kind of becomes, I don't want to say second nature, but you don't have to think too much to, when you're doing this every day and you're trading gold every day, you're following the news every day, after a while, you kind of understand what all the levers are, and you've experienced times when they haven't moved in tandem, and you kind of understand why that happens and when it doesn't. So here we have the 5-minute spot gold chart. As I said, let's go all the way back over here. This is the Asia session. This box is, let me take all the indicators off of here. Well, let me leave it up here just for a minute so you see that this is the Asia session, and then this is the pre-London session, and then this green box here is the London session, and then we've fallen out of the London session. Price has taken a dive, come down through this blue band, which is last week's low of the week. Let me take all the indicators off now. All right, so this leaves us with simply the pivots and a couple of other drawings that I've put here, which is last week's low of the week is this blue zone. You see there's another pivot, the DM2, that runs right through the middle of there. The DM2 on an intraday basis, meaning during the day of trading that we are in, the DM2 and the DM2 changes position every day based on the previous day's open, close, high, and low. So we see that price hit the DM2. The DM2 is typically where sellers take profit, pushed through, kind of spiked through, and then came back up. We're reacting to that level. And now we're hitting these other pivots, the monthly pivot point and the weekly point 2 pivot, the WM2. We'll talk more about what these pivots mean in the context of our trading as we're doing the trading. You'll hear us commenting on what's going on and what these pivots mean. This orange line here where it says SO is Sunday open. That's where the market opens this week. And you can ignore this line here that says pancakes. I need to change its color though, because that has to do with some spot gold trades that I have open that aren't going to be relevant to our trading day today. This pivot right here is the daily pivot point. So if we look at kind of where price is right now, and usually what I like to do when we open is I go over here to the 1-minute chart. Let's pull this up. So it's the same thing. We're just looking at it a little more zoomed in, so you see more candles rather than each candle representing 5 minutes of market movement. Each candle here represents 1 minute of market movement. And if you'll see what I did back here at the beginning of the Asia session. We have to scroll back a ways for that. At the beginning of each session, I like to put price in a box. Nobody puts baby in a corner. No, but this is the price. All right, so I take this box that I was using over here for the Asia session. I just drag it, just keep reusing it, because once we're out of that zone, it doesn't really matter. This is just to begin our session. I take price, I put it in a box. And that tells us throughout our session where we were when we sat down, and usually where price needs to move out of in order for us to consider taking any trades. This works best when price is consolidated when you get to the desk. But as we just saw, price took a dive here. And now, yes, price is consolidated a little bit, but it hasn't been consolidating for very long. So there's the top of the range, there's the bottom of the range. I don't even really have to readjust the size of this box because it just happens to fit in perfectly, but that isn't always the case. You know, you adjust the size of the box according to where price is. Okay, so there's our little prices in a box. The top of this box is the WM2. The bottom of this box is essentially the DM. What did I say that was? The DM2, right? Indeed. So let's actually make this a little bit bigger, because that DM2 there, we already know that we're not going to be trading from this box to the DM2. So let's just make this box the right size to begin with. Probably don't want to trade until we're below that earlier previous day high volume node right there. Okay. So that is that. And okay, so that's that. That's where we are with spot gold right now. We don't have any immediate news that is really impacting the market. It appears that there continues to be bearish sentiment. We were bullish yesterday, but it kind of looks like let me go over here back to the 15-minute chart. Oh, and our MT4 stopped working again. I'll get that back up here in a second. All right, so this is the 15-minute chart, and you can see, in fact, I'm going to pull it out to a 30-minute chart. You can see here that, we've been, well, actually, if I bring it out to a 1-hour chart, you see it even better. So you see that, we've been in a downtrend for a couple weeks. Maybe started, well, this is August 8th, came down, leveled out here for a day or so, came down again, came back up, came down, we keep coming. And then yesterday, we retraced a little bit. Now, if we look, this is a 1-hour chart, I'm going to put our indicators up, and the first thing you're going to see, or I'm going to point out to you, is our regression channel, which is going to be kind of showing trend lines, I guess you could say, in the direction of the chart. So you'll see here this blue dotted line here on top, this blue dotted line here on the bottom, and it's kind of hard to see, but a solid blue line running right through the middle. What this shows is our direction of travel. And we see that price came down to the bottom of this range, came up, we said, okay, well, maybe price is reversing, maybe we're going back into a bull market. But that isn't what was happening. We went up here, hit the top of this range, we're still in a downward market. Now price coming back down, it might come down to the bottom of the range and then kind of do that all over again. At some point it will reverse and go back up, but in order to do that it needs a catalyst. Today we have some economic news coming out. We have unemployment rate, we have flash services PMI, what else do we have? We have the Philly Fed manufacturing index. So if a number of these news events turn out to be deflationary, driving the dollar down, then it will drive gold up. And it takes a catalyst like that, or something happening in the world to change the direction. Okay. These get a little complicated to look at with all of this, with all of these indicators now. So let me zoom out and show you what you want to pay attention to. Once they appear. All right, we have the regression channel, which shows you the direction of travel with the dotted lines on the outside and the solid blue line through the middle. You want to pay attention to these horizontal orange and red lines and these horizontal green lines. The green lines are supports, the orange and red lines are resistances. We have an indicator that goes ahead and paints those for us. They're very relevant to the way that we trade. In fact, I would say mostly those are the indicators that you're looking at. Additionally, we're looking at these red rectangles that form up here. Those are called bear volumes. We use an indicator called swing ranges by Chart Prime. I think that's what it's called. Swing ranges, yeah, by Chart Prime. And they paint some of these other boxes here, which I don't really use. You can kind of ignore those. But look at the bear volume and the, down here on the bottom side, we'll find another one. It will say, oh, there it is. It's kind of right behind this blue. You kind of see it in there. But there's a little bull volume right there, and you see that price hit that and it did react off of that. All right, so the pivots are the only indicator on the chart that are predictive. Every other indicator on the chart is reactive. It's showing you what already happened in the market. But the pivots tend to show us where most of the time price is going to stop, think about what it's going to do, maybe reverse direction, maybe pause and then continue. But we don't like to trade right into a pivot or right into one of these orange lines that is has to do with volume. And you know, some of these other and supports and resistances. So if you think about, this is the playing field, or this is the racetrack, and we are trying to trade with momentum, or trying to trade with the direction of travel. We don't want to trade right when price is about to hit a stop sign, and there are a lot of stop signs. So we have a lot of things on our chart that show us when we don't trade. Okay, this is the 10-second futures chart. This is the only futures chart that I have open on my entire system here. I have 8 screens. The futures chart is where I take my futures trade, but we do our charting and we look at our pivots always on spot gold charts. There's a good article on the blog, thebarcelonatrader.com, that talks about why that is. You can go to thebarcelonatrader.com, scroll down the home page. I think it's one of the first articles. Once you get past the top portion of the site, there the blog articles begin, and you can see there why we do our charting on spot gold, and why we do our price discovery and our trading today on futures. You will see that the futures price is different from the spot gold price by a few dollars, but the charts move in tandem. So, you know, every tick down on the spot chart is a tick down on the gold chart. So price is of course important, but you know, what we're looking for are these movements between prices, and we can visually see those with chart movements, even if we're not paying attention to the exact price that we're trading at. Okay, I need to get MT4 back up and running, so these are the other charts that are important. Okay, here's our MT4. Strange, not rendering properly. There, okay. So over here to my left, I have two screens of MT4, not in addition to the 8 that I just mentioned. That's part of them. Here we have, and this is the only place on my charts where I use traditional Japanese candles. And of course, this was all taught to me by Tono, my trading mentor, who may be joining us this morning, may not. Depends on what he has going on. But we have, this is the only place on the chart where I use traditional Japanese candlesticks. This is a 15-minute chart here on the upper left. In the middle, to the top middle, we have the 1-hour chart. On the top left, we have the 4-hour chart. On the bottom left, we have the daily chart, where each candle is 1 day's worth of movement. In the middle of the bottom, we have the relative or the currency chart, where the blue line is the dollar and the yellow line is the Japanese yen. And on this chart, the yen is stand-in for gold. They tend to move in tandem. Not always, again, but they do. And when they align, it's great, because this is a good indicator then of whether price is immediately in an uptrend or a downtrend. Same here with the FX trend display. This shows us our direction of travel and the strength of that direction of travel. So now you have, well, except for these last few charts I will show you, you've pretty much seen all of the indicators that we use. And you can learn to use these indicators and set them up for yourself by going to the BarcelonaTrader.com, and you'll see here at the top of the screen that I'm showing it. It is where you can find a free trading course, and the first few modules of that trading course tell you how to get set up with our MT4 indicators, and you can learn how to trade exactly the way that we do. Or you can just learn it by hanging out here and using your own indicators and learning how your own indicators, what they are doing when ours are doing certain things. You know, if you think about trading like flying a plane on instruments, as long as your instruments work, you can learn your instruments and learn what the market is actually doing as seen through your instruments. Okay, next screen over here. On the far right, we have our Renko indicator. This indicator moves based on price, not on time. And we have this one set to a very sensitive level. So this is great for us being able to determine our entries and our exits. Next to it, we have the 1-minute Heikin-Ashi chart, the 5-minute Heikin-Ashi chart over here, and the 15-minute Heikin-Ashi chart over here. We use Heikin-Ashi candles to help us spot the trends a little bit easier. And we use these charts not only for their movements. Of course, we have the 1-minute, the 5-minute, and the 15-minute open on TradingView, and I'm able to see them here on my other screens. But here we have these supports and resistance indicators. The blue lines are supports, the red lines are resistances, and that makes it really easy for us. And this indicator sometimes prints supports and resistances that we don't see always in the same way or with the same clarity on TradingView. So being able to see them here is a real help. Okay, here we are back on the 1-minute chart, and we see that price has to move up out of our box, which is good. But again, I'm not sure we're going up right now. If we look over here on the right side of the screen, we see that the US dollar is significantly stronger than gold on this blue relative strength, relative currency strength chart. Gold is at positive 4.0. I'm sorry, the dollar is at positive 4.0, and gold is at positive 0.2, meaning gold is significantly stronger than the dollar. Excuse me, the dollar is significantly stronger than gold right now, meaning that we should be in a downtrend. That means that at least for right now, until I get a feel for what the market is doing, I'm not going to be taking any buys. Might take a sell, but no buys, certainly. I'm going to open my iPad here, where I take notes by hand with my Apple Pencil. I like doing that because one of the things you don't want to do is trade when you are on tilt of any kind. And one of the earliest indicators that I might be feeling anxious, and I haven't noticed it myself yet, is my handwriting will give it away. My handwriting's pretty sloppy as it is. Just is. But if it's extra sloppy, I'm going like, oh, check yourself. Check yourself. Should you be trading? Are you upset about something? Usually, I know what I'm upset about. I'm upset about just having taken a loss or two. So we're going to try to avoid that today, as opposed to all other days where it seems like I seek those losses. No, I don't. I don't. All right, so it is 7:52. New York session begins. Let's set some alerts for ourselves so we are alert when certain things happen here on the charts. 7:59, 8:19, 8:29, 8:59, 9:29, 9:59. We have 10 o'clock news today, so we'll probably be around till about 10:30, possibly a little later, depending on what's happening on the charts. And let's change cameras. Okay, let's get into it. Okay, we're coming back down into the range. Even though that movement looks interesting, what I'm seeing here is that we would be trading right back into the WM2, and right below that, right back into the MPP. That is one of those stop signs where price is likely to react from there. So even on days where it isn't reacting strongly to those pivots, especially the WM2 and the MPP, those are considered strong pivots, and don't want to trade into them. So I won't be taking trades on the way down. Most likely, maybe between the MPP and the DM2 right here, maybe in there if there's some good movement. You know, if price act showing some strong movement, but even so, that isn't a lot of room. It's like 2.5 pips. So probably not, especially because there's this little resist or this little support right there in the middle. So I'll probably, if we come down, want to wait until price is below the box. Okay, we have 1 minute for the 8 o'clock candle. There's the 8 o'clock. Now we have news at 8:30, so not too surprising if nothing much happens here at 8 o'clock. Traders are waiting to see what that news is before placing their trades, their big trades. Okay, we are getting some movement now out of that box. Eight o'clock is where I officially begin the New York session, even though we get here at 7:30 and sometimes a little earlier than that. That 8 o'clock candle through 11 o'clock is officially my trading window. My rules allow a trader to pre-session, but only if certain conditions are met. Basically, it has to be an A or an A plus setup, and it has to be moving. Now we're coming right up into another pivot here. There isn't much room between where we are and that pivot. Less than a pip, so I'm not going to be taking that. That pivot is the daily pivot point. So we should see price react off of that. There we go. Now we're pushing through that pivot point. Interesting. And I have a decision to make here about my hedge. Do I want to get out? I don't think so. Now we are hitting today's point of control. That moved through there quickly. Point of control is another area that's a bit of a stop sign. Yeah, we are seeing some strength differential between the dollar and gold right now, where gold is stronger. Previously, the dollar was stronger, we saw when we were here before. Again, this is the 10-second futures chart. This is the chart I trade off of. Now, if I look at this on Now this 5-minute chart, we see that price came down here starting about 6:30, bottomed out here, and kind of sprang off of this level. Here's where we put price in a box, but it actually wasn't in a box. It was on its way up, but kind of, I think, still bouncing off of this bottom. The question is now, will it reach the top of this channel, topple over, and come back down and go in the direction it was originally intending? Or will we hit here, consolidate up here while we wait for 8:30, and at that point, gold will decide whether it's going to continue upward or down. Same thing on a 1-minute chart. All right, you can see here on MT4, we have reached the top of a channel here. We've got some resistances right here on the 1-minute chart. We also see a resistance on the 5-minute chart. We see this resistance on the 15-minute chart. If we go over to our regular Japanese candlesticks, we see a resistance right here on the 15-minute chart. So we've got confluence between several charts where we see resistances. We have this swing high here on the 1-minute chart, which is also a stop sign. So there's so many, even though you see this beautiful price movement up here where you feel like, okay, in hindsight, you could have traded that and made a lot of money on the way up. But there were a lot of stop signs along the way. And while sometimes price does not respect the stop signs, can't count on it to not respect the stop signs. More likely than not, it will respect the stop signs. And then if you trade into it and price reverses, because I use such tight stops, I can get stopped out pretty easily. I need to make sure price is going in the direction of my trade.
Good morning, Mike.
Hey, good morning, Rock. How are you doing?
I'm all right. Is Tono not on?
No, he's not. Nope, he must not be feeling well today.
Yeah. Whoa. Wow, look at that climb.
Yeah. After that drop, and look, we just made a little higher high. We're higher than where that climb started from.
Wow, that's insane. All right.
Yeah.
8:30 news, right?
Yeah, 8:30 news, exactly. What do we have at 8:30? Unemployment claims, Philly
Right.
Fed Manufacturing Index. Then at
Uh-huh.
9:45, we have Flash Manufacturing PMI and Flash Services PMI. And then at 10, we have existing home sales, which is a orange folder.
Okay.
We have the Jackson Hole Symposium, which is a big annual economic conference of central bankers in Jackson Hole, Wyoming. So we have a lot of reporting going on from there all day today, and people can say things that move markets there sometimes. So kind of keeping an eye on that.
Nice.
So this is the calm before the storm period right now, with this 8:30 news coming up in 15 and a half minutes. But we certainly had a nice run and a nice run up after that. I'm sure some people traded and some people made some money. Oh, yeah. And we've overextended to the upside now a good deal, and maybe under other circumstances I would take a sell here, but because we have the news coming up, I don't trust it. I think that there's a good chance that we're just going to consolidate here rather than keep coming down after that run up. right, we have 1 minute for the COMEX open at 8:20. So right here on my chart, it's looking like gold wants to come down, and there is some room for it to come down. But unless it shows a little more ambition or decisiveness on the way down here, I'm reluctant to take a trade so close to news. When not that we're so close to news that I couldn't get out of the trade before news. We've got almost 10 minutes, but I just don't think price is going to do much. There's no reason for traders to drive the price up or drive the price down right now when you have economic news coming out in under 10 minutes that is going to give us a better indication of which direction price might be going for the rest of the session. So if I were to get into a trade, let's say I'm going to take a sell now, I might get a tiny movement, but there just wouldn't be enough volume. There wouldn't predictably be enough volume to drive price down. That doesn't mean it can't happen. Anything can happen in the market. But it's not something I'm going to take a gamble on, so to speak, even though trading is not gambling. Some people consider it to be, and it is if you don't know what you're doing, and it always is a game of probabilities. But good traders aren't gamblers. The best traders are the best risk managers. Just logged me out of my trade, my account.
Sorry, my laptop crashed for a second.
Oh, yeah. I realized I was talking to myself again there for a little bit.
It just, yeah, I think I'll have it cleaned or something. I really don't know what the issue is.
Yeah, I've had a laptop or two like that over the years.
I think it was some kind of a weird virus or something. Nothing major.
It took me a long time to switch to Mac. I've been on Mac for a long time now too, but, maybe 15 years.
Oh, okay.
But when I finally switched to a Mac, I just thought, what took me so long? What took me so long?
Oh, really?
Yeah. I mean, I have a PC here that I run MT4 off of, but everything else, and
Right.
For my business and everything, I've used a Mac for.
You use the Mac.
Yeah, I would say over 15 years now. So this little, it has been coming down, but it's just been creeping down.
Yeah. Any predictions for what the news will do?
I mean, given the last few releases that have been inflationary,
Mm-hmm.
I would guess that we have some inflationary news coming out, which will drive gold down.
Oh, okay.
But, you know, that's just a guess. I have no idea. I don't even know if the numbers are reliable anymore.
So inflationary news, right? Yeah, there's that.
Yeah.
So you think inflationary news will drive the numbers down?
Inflationary, any news that's inflationary drives the dollar up.
Mm-hmm.
So in turn, gold would come
Got
down.
it. Uh-huh.
Sometimes that's
Okay.
not the case.
Mm-hmm.
Sometimes inflationary news, you know, makes you think that okay, they're going to have to raise interest rates, and in which case that could drive gold up as well. It depends on the context, really. But I mean, right now, inflationary news would drive gold down.
Okay.
So unemployment, that means unemployment, if it comes in hot, if it comes in that there's high unemployment, that would be inflationary.
Mm-hmm. Mm-hmm.
Or no, sorry, low unemployment would be inflationary.
Okay.
I believe how cool it is outside, 61 degrees.
It's beautiful out.
Yeah.
It's gorgeous out. Oh my God.
I love days like today.
Mm-hmm.
All right, 45 seconds. 10 seconds. 5, 4, 3, 2, 1. News. Initial algorithms pushed price up. Now we're whip sign down. All right, so we don't have the US data yet. Unemployment claims are bad for the dollar, so it looks like they were high. Bad for dollar, driving gold up, and Philly Fed manufacturing, which is going to be less impactful, I think. Still waiting for that. Also bad for dollar, driving gold up. Okay. So at least
All right.
on that batch of news, we have some more news at 9:45. We have flash manufacturing PMI and flash services PMI. Well, look at that. So gold's coming down anyway. We're resuming what we were doing despite that economic news. We came down. We hit the pivot point again, the daily pivot. Now we're back off of it a little bit, pulling up into the point of control. If we look here at the 1 minute chart, we just see, even though it spiked up and then kind of came back down, it's really just a consolidation right here on the point of control. You can see the same thing here on MT4. There. Strange movements. You don't want to be caught in there. It's just going back and forth. If we can get above the swing high on this 10-second futures chart, there might be a futures trade between this swing high and this bear volume zone right here. Let's see if price is going to move decisively there or if it's just going to pussyfoot around until the 9:45 news, which again is flash services PMI and flash manufacturing PMI. These two right here. Okay, let's look here. I think we're going to go in on a little buy. resistance, but we're pushing through it nicely. Keep going. I think I'll take that. Okay, I got 70. Wanted to get 80, but I got 70. That was a win. Have some confession. And that was the trade. Anybody took that with me? Congratulations.
Good stuff, Mike. You won.
I won. Won the trade. Not the day yet. Not the day. All right, just to explain to anybody watching, the reason I took that trade was we had come up here. We're on the 10-second futures chart. We were pushing through this swing high here with some nice volume. I could see us coming into that with this next strong candle here. That's when I decided to get in. I took the trade on this candle. It pushed through that candle, pushed through on the following candle, pushed through on this candle, wicked up. That's where I got out, right there at the top. I think that's just kind of a feel for how far we could go. I started noticing price coming back. I was looking at the Renko chart, which is this one here, and I noticed that when price got up to that crest level, it had started to come back down right here. I thought that's my cue to get out. So it wasn't a very long trade. In fact, if I look at it, the trade lasted all of 19 seconds. Good trade. Trading one contract, one futures contract. So $70 isn't a lot, but when you multiply that across the number of accounts that I'm copy trading, it's not bad. Let's go back here and kind of see what's going on now that the markets are open. VIX is where it was. That won't move until equities open. The dollar has just dropped after that news. Boom, 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 boom. That's what sent gold up. There it is on the 30-minute chart. And we've also seen yields kind of follow suit. Yields came down. News was deflationary. Right, we have more news coming up in 3.5 minutes almost, just a little bit more than 3.5 minutes. So we're going to pop over here to this panel and monitor that. Need to refresh so I can see the clock ticking. Why don't I see the clock ticking? Oh, excuse me, that's 9:45, not 8:45. Excuse me. All right, so we have a little ways to wait for that. My bad. I've been saying we had more news in 15 minutes for the past 15 minutes, so my apologies.
I thought you were saying 9:45. That's what I was hearing.
Yeah, I might have been saying 9:45, but in my head I was thinking that's 15 minutes from now, and so I was. One of the reasons I was hesitant to take the trade that I took, you know, if there was one voice on my shoulder saying don't take this trade, it was because we had more news coming up so soon. But given that we've got over an hour for that, you know, then okay, we're going to see some movement between now and then that will be tradable. All right, I'm going to hide this news panel. All right, let's see what we have next here. Let me see. Here at the 1 minute. We see we're coming back down. There's a little something to trade there perhaps, but we don't have any. If we have any price differential here, strength differential at all between the gold and the dollar, it should be moving up right now, and instead we're coming down. So I don't want to take a counter trend trade, even though price action is indicating that wouldn't be a bad idea right now. we're coming back down right into the daily pivot here in just a moment. We're poking, we're just touching the point of control right now. So again, that's a stop sign on our road, and we don't want to trade into that. Excuse me just a moment. I'm going to open the window, get a little breeze going through here.
Hmm.
Just kind of consolidating in here right now. Look at it here on the 1 minute chart. Nothing really tradable here right now, but we are clearly in an uptrend on the 1 minute. The 5 minute hasn't yet switched over. And on the 1 hour chart, we're solidly still in the downtrend. So if we look over here on the right, we see that the dollar is weaker than gold. That would indicate that gold should be going up. It's coming down. And while price action is king, I don't like to counter trend what some of my most reliable indicators are telling me. Just because then if the trade goes against me, I've got no one to blame but myself. Now, frankly, I'm all for price coming down right now because I've got a hedge on my spot account at 33.38. Right here, right at the point of control, actually. So if price comes down below that and plays below that for the rest of the session, I'm good with that because that gives me the chance to get out of the hedge on the way up. But when price is just playing around the hedge, you can't really do anything with it because you just don't know what's going to happen. You don't want to spread it out further. All right, we've got about 5 minutes for the next hourly candle. Excuse me just a moment. I'm going to run and grab my water bottle. I'll be right back.
It's not doing much of anything, huh?
No,
No, it's
nope.
just gonna. I think until 9:45.
I don't know. It would seem like traders would trade in between these bits of news, but
Right. Also, considering it's summer, they should
yeah,
keep trading.
yeah, yeah. We have to take into consideration that we are in the dog days of summer, and
But they don't seem to think about our or care about our feelings.
yeah, the audacity.
The audacity to just not trade when we
Right,
need them to trade.
right. If market makers don't make the market move, what's their purpose?
Right.
If you close for the 9:45, if it gets up or down.
All right, 1 minute. 1 minute for that hourly candle. 9 a.m. in New York. All right, that's it. 9 o'clock, 10 seconds ago, actually. Okay, we might be trying to go up again, but we've got a couple of resistances here on the 1 minute chart, and we're coming into one on the 5 minute chart too, so we're not going to trade up into that, but we're going to try to get above that or see price action really moving smoothly through it before we decide to get into anything there. These movements are just noise, just movements. Just movements. And so we sit, and we wait, and we say to ourselves things like,
This is so boring.
That was the right sound effect.
yeah. If trading is boring, you're doing it right.
Yeah, feels like that everybody's waiting for 9:45.
Yeah, or you know,
This is it.
everybody got their trading done on the 8:30 news, and then went to play golf.
Yeah.
Went to brunch in the Hamptons.
Yeah. Yeah. Because avocado toast tastes better in the Hamptons.
When you pay $30 for it, it tastes better.
Yeah, of course.
August 21st. Pretty soon it will be September. Labor Day the markets will return to their normal trading behaviors. But until then, we deal with low volume, low volatility, or sometimes high volatility because of the low volume. And trading days that don't give us as many opportunities as we would like to have or that we normally have. But it's also good to learn to trade in these market conditions because, after you've traded for a few summers, you kind of start getting the hang of it. At least that's been my experience. This is my third summer, third summer, third or fourth
Wow.
third summer, I think, trading, and each one has been a little bit different, but all of them have this in common with, you know, long stretches of just market subdued markets.
I've got 2 trades open, buy and a sell, both in about a 3-pip drawdown. I'm like ranging in the middle.
You're right in between.
Yeah.
You'll
just-
probably get out of both of them today. You know.
Oh yeah.
Yeah. Yeah, it really makes a difference to me if I've slept well. I can really feel the difference in my trading. Just kind of like the mental and emotional capital that I have.
I believe it. I believe it. Do you have sleep issues?
Yeah. Yeah. But since I sold my company,
Yeah.
I can take a little nap after I trade, kind of like Tono does. So,
Good, good.
but I slept pretty well last night.
Good.
Daddy, what are you doing? Suddenly I heard my dog barking from outside. I'm like, wait a minute. Had to go.
Was she outside?
Yeah, we have some workers out on the terrace that are still, been doing this for a long time. They're working on the facade of the building, so they use our terrace to set up their scaffolding so they can rappel down the building. And the dog likes to bark. She's a sweetheart, but she sees people she doesn't know, and she likes to bark. And usually she barks from inside when she hears them outside. And suddenly I'm sitting here because I have the terrace door open. And I hear barking from outside. I'm like, wait a minute. Hattie,
Yeah.
you stay out. You stay in here.
Dog must be grateful it's nice out.
Yeah, yeah. I might like to take this trade up here, but I'm not going to again, because if we go over here to our MT4, we see that we have strong resistance zones right up here. Trade up into that. We see it also here on the 5-minute chart. I don't want to trade up into that. Price can turn around really quickly on you, and I trade futures with a very tight stop loss and can turn around and stop me out really easily.
I meant to ask you, Mike, did you ever consider keeping the 120, turning that into like 200 instead, or 250?
Yeah, I used to have it at 270, then I had it at 250, then I moved it to 200. And what happened was, one or two losses would put me in a situation that I couldn't recover from during the day. Hang on, my dog went back. She's in here. And so with 120 stop, I can recover from that during the day. I can place trades and I can come back and be in the green. And because my biggest challenge was, I couldn't bring myself to close the trade if I thought, or I would start rationalizing with myself that, hey, it's going to come back, or market structure. If I just let it get down to, 800 against me, I can see that there's some market structure there. It's going to bring it back. And then the problem would be, and most of the time, market would come back and it would give me a little bit of profit. Never very much. It would give me like, $30 profit after I went $800 into drawdown. But the devastating part, when it would get down to $800 against me, and then market structure wouldn't stop it, and it would just keep going. And then I'm like hitting my daily drawdown limit on my challenge accounts, and blowing accounts. That's real money. So I really had to refine my entries, which I'm still struggling to do, but I'm trying to take only entries that are pretty high probability, and If I get stopped out, hey, I get stopped out, but I can usually recover.
Uh-huh.
And
Yeah, yeah.
my trade win rate is
Right.
close to, well, it kind of oscillates between 70 and 80%. So
With the 120.
with the 120, yeah.
But- Okay.
So I'm still
So-
winning between 70 and
Yeah.
80% of the trades.
Cool. All right.
Actually, right now,
But
though,
like when it gets to that,
no, go ahead. What were you saying?
no, I was only thinking because like it gets to 120 real quick, and if when it stops you, then you lost the 120.
Yeah. Yep.
That's why I came up with that.
Yeah.
Like whatever,
Yeah.
maybe a little than 120 would be.
Right now, my average loss is 155, and my average win is 116.
Yeah.
So, and I guess it's 155 because sometimes when price moves violently against me, even though I have the stop set at 120, it will slip me sometimes to 150 or 130, something like that. But oh, and I can see that I had a $374 loss because I was trading 2 or 3 contracts at a time on that one. So sometimes my loss is 12 ticks, but if I'm trading more than one contract, then instead of a 120 loss, it's a 240 loss, right? But even though my wins, my average win is smaller than my average loss, as long as I'm winning significantly more trades than I'm losing, then I'm that's my edge. I'm still experimenting with it.
Yeah.
I'm not 100% sure that this is the right formula for me, but it seems to be. I'm overall I'm on kind of a I've got a good equity curve.
Right. Good. Yeah. Yeah. I only said it because like every time I hear the thing stop you, like Jesus, and then
Yeah.
and the just like 2 minutes later you would have had a bit of a profit.
Yeah.
That's the only reason.
Yep. Yeah. And I was trading that way for quite a while, and thinking, this is great, but that occasional time where I would get wiped out because it didn't work out for me was just too much. It was setting me back more than I was making.
Yeah. That's the if you did the statistics on that, then you know what you're doing.
Yeah.
Yeah, I was able to get out of that buy.
Oh, good. But you might have to hedge your sell, right, if it doesn't come back?
Yeah, maybe. All in all, I wouldn't have to, because I have three trades on the board from the past.
Yep.
So it would still even out.
So you would just close the sell before it gets too...
I mean, yeah.
Mhm.
I wouldn't close it. I would leave it as a hedge.
Oh, I see. Yeah.
Because I have 2 buys and one sell on the board from the past.
Yeah.
Like I've realized how much leeway I can take with a trade. Like how much I can just monitor and not have to hedge it.
Yeah.
I've been
I never leave a trade, like if it's, but I never leave it without at least a pending hedge put in at some distance, because occasion it's happened to me a couple of times where I've had a trade in. I'm thinking, price is pretty close to it. I don't need to have a pending hedge in, and then something happens, like war breaks out or something, and price just shoots in a shoots. It never shoots down, but it'll shoot up, and
Of course.
I'll be like, oh crap! Now I got to hedge so far away.
Yeah.
Whereas if I had had that pending in there, it at least might have slipped me a little bit, but it would have stopped the bleeding.
Yeah. I am gonna start doing hedge pending soon.
Yeah.
I just gotta make sure I know how to do it right.
Yeah.
Yeah, that's exactly what happened to me. The war broke out and it almost wiped me out.
Yeah. All right, we have about 2 minutes for the 9:30 candle, which is when equities open. Let's take a look at what equities are doing right now. A lot of red, a lot of red. It has been a bad week for tech stocks. One minute for that 9:30 candle.
We should do countdowns with hats and kazoos for these things. Party hats, kazoos, balloons.
Little mariachi band.
Sure. I mean,
Why not?
if you want production value, yes.
2, 1, 930. Okay. Thinking about there might be a buy coming up here. We continue to show strength. Getting through some of these resistance zones. Got into that. Just as I clicked the button, it shot up. And instead of getting in on the trade, I kind of missed it. Hopefully it's going to go and give me a little bit here before it comes back on me.
Yeah. It is.
Don't like the way it's moving here. It's probably going to shoot up as soon as I get out, but don't like the way this is printing. Don't like this at all.
Empty 4 frozen.
Damn
That's
it.
a sh-
That one went south so quickly I didn't even have a chance to get out of it before it. Your MT4 froze?
Yeah. Frozen. Still frozen.
Huh.
That's weird. Yep. Mary's us too. That's weird.
Yeah.
Okay. That's fine. It's working now. You want? Yeah.
All right. That was a loss.
It's too bad.
We are about 9 minutes away from news. Yeah, we've got about 5.5 minutes. Sorry, 6. Yeah. No, wait, what time is it? 39? Yeah, 5.5 minutes.
No, I don't need the phone. Keep charging it. It's a charge. I didn't keep it there for my good, my health.
Well, it's just laying on the couch, man. Sophie, come on, dinner. We're excited. Sophie, get up. Get up. Where should I put you? Just right here.
Okay. About 2.5 minutes.
Two minutes, huh? Yeah,
Yep.
yeah.
A minute. Twenty seconds. One zero. Here we go.
Whoa.
That pushed right through the bottom. Good for dollar.
Yeah.
Manufacturing good for dollar. And service is probably good for dollar too. Yep. All right. I think we are going down for a little bit here. What? Okay.
Now mine froze. All right.
$80 there.
Another win.
Another win, but I had a couple losses there, so need to make a little bit more back if I can, if the market gives it to me. If not, might be calling it a day shortly. It is almost 10 o'clock. enter to buy. We are 1 minute before the 10 o'clock candle, so I might not want to stay in it.
That's a brave man.
Damn it. I'm going again.
Uh-huh.
Okay. Took 340 on that.
Nice. Very nice. $340. That's a
Yeah,
first summer day. That's a big.
yeah, I was trading 2 contracts on that one though.
Mm. Good.
Sorry, YouTube, but when I go silent like that and don't talk for a while, I'm just in the zone, and I'm trying to trade my way back to green since I had a couple of those losses there. One of them was kind of severe.
Yeah, I mean, there's nothing.
Hattie.
It's not like I'm gonna. Just throw me my phone. Just throw.
And we also had existing home sales. Which ended up being good for the dollar. Okay, we took a win there. We are almost back to break even, but I gotta stop this habit of taking losses and then trading my way back to break even and then calling it a day. That isn't that's kind of a sucky trade day when that happens. A lot of chop right here, a lot of chop.
You start this camera. Taylor's touching the computer. It's not funny. If he fucks up one of my trees.
Talking about me?
No, she's tough. Yeah, she's threatening to slap me.
Oh. All right, let's see. Doesn't look like it wants to give us any more. There's no more news coming up, and the market just kind of went completely dormant. I'll give it through the 10:30 candle, and then I'll probably call it a day, even though I'm taking a little bit of a loss. Sometimes that's the way it goes in a session. make it back next session.
Overall, are you coming up a little below?
Today, yes, yep. Today I am a little below. Yep. Not about winning every session. You know, when you're fighting a war, you don't have to win every skirmish. You just have to win the war. And sometimes you take tactical retreats. And when the market's not giving you the opportunity to win, you live to fight tomorrow. Yeah, we've got about 7 minutes for that 10:30 candle. Hang on, I gotta find out where my dog is.
Okay.
All right, she's being a good girl. She's laying down in the other room.
Huh.
All right, 5 minutes. 5 minutes for that 10:30 candle. Hopefully the market will give us another trading opportunity. And if not, that's okay. The market will be here next session. We'll be here tomorrow. And if you took a loss today and you're at drawdown, just remember, it doesn't define who you are, Mike. It doesn't define who you are. Okay, we have a lot of strength differential between gold and the dollar, with dollar showing more than twice the strength of, I'm sorry, with gold showing more than twice the strength of the dollar right now. So why are we going down?
Yeah, that's a good point.
All right, 1 minute for that 10:30 candle. Five, four, three, two, 1, 10:30. Initial push to the upside. That could might be a Judas candle. Peek at stocks. Still pretty red, but some neutral. I'll take it. Take the 20. Not push my luck there. I think it might have only given me 10. I think it did. I think it only gave me 10. Shall we try again? Nah, I don't think so. Got the value area high right there, then a swing high, and then another pivot. I think I'm going to call it. Might move up here for the next half hour, but I just don't. I'm kind of out of mental capital and emotional capital, and I'm down, but I'm not down significantly. I'm still up for the week, so I think this is a good place to call it. I'll come back in the Asia session at 7:45 p.m. and we'll go at it again.
Sounds good, Mike.
All right, Rock. Have a good day. I'll catch you on the rebound.
Yeah.
Catch you tomorrow morning. Okay.
Absolutely.
All
See
right.
ya.
See ya.
Bye.
All right, we end our Zoom session here, YouTube. Let me click out of that. Little housekeeping with YouTube guys. As I said, I will be back at 7:45 p.m. tonight, probably with my trading partner and mentor Tono. who will be calling spot gold trades. I'll still be doing futures trades. So what do we do today? We ended up taking 7 trades, 4 wins, 3 losses. One of my wins was pretty significant, $340. But I had a $249 loss as well, and a couple of other $120 losses. All in all, I'm down about $60 on the session, but I'm still up for the week. I'm up for the month. There's just a little setback. $60 isn't much. Not enough to affect my day. And we'll have a chance to make some of that up in the Asia session. Now, what I need to work on, where's my camera? There it is. What I need to work on is picking my early entries better. I need to make sure that my early entries, and today the first trade I took was a win, but the second trade I took wasn't. Now, looking back on that trade, I know that my entry criteria was there, but it could have been stronger. There wasn't enough strength differential between dollar and the gold, between the dollar and gold. I would call it an A to an A minus setup. It wasn't an A plus setup. And with my stop losses that are so tight, I really need to make sure that my entries are spot on. That if it goes against me, it's not because the trade wasn't good enough, or that it isn't because my indicators and the strength of the trade wasn't good enough. So that's what I'm going to be working on the next session and the session beyond that. Otherwise, I've got this futures. So I switched from trading spot to futures a few months ago, and it's been a bit of a steep learning curve. I'm still trading spot, but on spot I like to hedge, so that means I have to trade with an offshore broker. That's not kosher by U.S. law, so to be compliant and everything, I'm trading futures right now. At least that's what I'm trading here on stream. But we'll come back to all of that and talk about the difference between spot and futures and hedging and why to hedge and why not to hedge and all that sort of thing. But for right now, let's call it a day. Thanks for joining, and we'll see you at 7:45 p.m. for the Asia session, 7:45 p.m. Eastern Time for the Asia session. Have a good one.